Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll time. Good God. I can't look at this, guys. Like my strategy is, you buy it and you hope that you get it's bad. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and they don't think that anything's wrong. Come back tomorrow and we'll lose it all. Should be fun.
Good morning, everybody. It is Friday. Gonna take it easy today. We can talk and everything. I don't know. It's been a long week. I have to say, it's been a long week, and but the market is doing okay. So let's come in here and check out what we got. The S&P 500 came like this close, 5 points to what would have been a 20% decline from the all-time highs. And then they've bounced, and it was a pretty significant bounce. If we get back above 4,000 and close the week on 4,000, that could maybe be one of the most positive things that could happen. I mean, short-term bottom, maybe it could be. It's kind of looking like that may be possible. Here again, it's kind of interesting. Remember earlier in the week we said, oh, there's like a strong bid in the liquidity, and we've moved up. Now, if the S&P 500 is going to turn around, I don't know what happens to the bonds here, but we're going to keep a close eye on it. But I think that we'll work out which way this is going for today in our CTA position and close it out for the weekend today, depending on if we see some sell side action. All right. Coming over into oil being bid back up. Natural gas kind of going along with it. Gold and silver still suck. Ugh. Gold and silver is so bad. It's so bad on that chart, man. Caba's still languishing too. So copper is kind of, I think, important to watch here, because how much of the bear market have we seen is because of Chinese lockdowns, and copper is probably going to give us the best idea of what's going on over there, right? Because I mean, the lockdowns that they're doing are just insane. Okay, Bitcoin recovering back above 30,000, and the dollar's still crazy high. Man, the dollar is just so high. That's a problem. So that's where we're at. Good morning, Octavius. I messed my camera around a little bit. I hope that looks a little bit better, but I got finally got a better stand in there that allows me to, lock it horizontally and vertically, so I can really zero in the camera on where I want it to be pointing. So, and also I got a different strap so that I don't have this stupid strap in the way, because that was always so annoying trying to move the camera around. So tell me what you think about that. Let's see here. So I was looking through. We do have consumer sentiment numbers today. This is going to be kind of important, because if we get more indications of weakness, it's really going to be like the strength of the consumer is the thing that is still strong, right? It is like, oh, well, we don't think that this is going to be like a full recession because the consumers are so strong. So consumer sentiment ends up being an important data point, right? Also, next Tuesday, we get retail sales. So retail sales could also be something that moves us. I'm thinking, it's I hate it when it's like, it feels like the market hinges on that like one data point, but if consumer or if retail sales comes out and it's bad on Tuesday, then it's really like, oh, we're going into a recession. And yesterday, Jerome Powell basically saying that at this point, whether or not we have a soft landing is probably nothing the Federal Reserve can do about it. So he's starting to admit that, things might go south for us. Good morning, D. Well, let's see here. A couple of things I want to look at here real quick. Okay. Well, let's see what's going through on Twitter. Nassim Taleb complaining about Coinbase. We believe our prime and custody customers have strong legal protections in their terms of service that protects their assets even in black swan event. Now, this is not a black swan event. Like, this is pretty much like guaranteed to happen sort of a thing. Let's see. Nassim is it's kind of funny watching some of these guys on Twitter. They're way more impulsive than I realized, because the one, I mean, I guess it's just Twitter, but it's like Bitcoin's falling apart. They just unleash. Whereas me, I mean, I'm happy to see Bitcoin come down, but I haven't really spent all that much time on it, have I? We usually talk about it early on. Luna is the equivalent of having an electric guitar repairman perform cardiac surgery. Some people know nothing about finance and feedback loops designing contract Luna. Nobody among users / institutions noticed because, again, nobody there knows anything about finance. I think you're true. Okay, so by the way, Elon Musk talking about the Twitter deal, maybe it's being reconsidered, that maybe the price needs to be lower. Elon Musk says still committed to acquisition. So they were down this morning because they were investigating it after, suggesting, after all of the news suggesting that the number of active users on Twitter is not as high as they claim. Twitter deal temporarily on hold pending details supporting a calculation that spam / fake accounts do indeed represent less than 5% of users. I don't believe that that's true. There's no way it's less than 5%. Straw war is emblematic of larger social issues? Okay. Good morning. Well, so far, Treasury's pushing up, but we are at the high end of the range here. So we'll see. It does kind of look like there's maybe some leaners here. Push up. I think this is going to be might be a little bit of a boring session. I don't want to dissuade. Well, you know what? If it's a boring session, you're gonna want to stick here. So that you have something to entertain you. Guess that means I better be extra entertaining. Let's see here. Steve Bannon calls on Elon Musk to drop his bid on Twitter. If these people are going to play games, walk. It's time for them to grow up and they need to learn a lesson. Let them clean house. Then you come back and buy it at a discount. Yeah. Well, if he walked away from the deal, Twitter would just crater. I mean, man, it would be ugly. I mean, the whole market is down, but yeah, it would be particularly ugly for Twitter. Now what's Nassim going on about? Ooh, in today's last lecture at Tandem, where I stand in for Peter Parr in the Black Shoals world, in the blah, 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 blah. Well, I don't know. Okay. But he posted a YouTube video. That's cool. Dynamic catching. Always love to see new videos from him. But it's options. That's okay. Well, we did have import-export prices. I should double check over here. We get anything in? Well, the treasuries just came back 3 ticks there, so they did lean on that higher end of the range. And, you know, it looks like they wouldn't be able to move much higher without the 6J going. 5-year fell back down further, so we're getting some flattening. S&P 500 looks, well, I don't know. I mean, it's up on the overnight, but here at this time, it looks awfully quiet. It looks awfully quiet today. Yeah. Good morning, everybody. Lean umbrella. Is that what you were here earlier this week, weren't you? Fake accounts ruin the Twitter experience and are incredibly easy for Twitter to purge. Why doesn't Twitter purge them daily? Why does Twitter allow malign influence operations to continue on its platform? Good question. Hey, I would ask that of TikTok too, because that happens on TikTok. You get these accounts that, you know, are pretending to be somebody else and they don't do anything about it. Like, what the? And you report them and they say, like, oh, it's fine. They don't take action. Daniel Inskeep did see our videos, so that's good. I hope that helps him out. I hope that he goes and he tries again, knowing what we've taught him, and it makes for an interesting video. I'm not going to say he's going to make money from it, but seems like he's been happier with his trading overall, so that's good. We should come back here and look. Well, how's that video doing? There, right there. Okay. Well, it's not doing super great for views, even though the reach metrics are looking okay. Like the impression click-through rate is pretty good. The retention is not terrible. I don't know. Seems like that video should be getting more views than it is, but maybe it's because of the keywords and stuff. My eyes are watering a lot today. I don't know what's with that. I mean, I put the eye droplets and everything. It must be spring. Yeah, well, you know what? Today was the first day because it was raining yesterday, earlier in the week, but today was the first day where I woke up and it was clearly light outside. So that's a big change. Good change. Let's see here. What time is it? 6:46. This is going to be a long session, guys. Well, actually, the treasuries are moving though. So like hard for me to sort out if the move down is any more significant than the move up. But we've gotten back and forth. Yeah, Twitter is pretty quiet too. Pretty quiet. Well, let's go around here. They're all still talking about the Elon Musk Twitter deal. I don't know. Is there anything interesting we can really say about it? I kind of feel like Elon Musked out. He's an interesting guy, but I don't know what else to say. You need to come visit us, Elon, and then maybe we'd have something to talk about. Here's something pertinent to my interests that is tangentially related to our stream. The California mathematics framework is fundamentally flawed and based on shoddy research. And you go down through all of this stuff. All these people complaining about it. Then there's like all of these scientists and mathematicians that are like really don't like the course. And they were basing it on a San Francisco program, but then they came in here and they looked at it, claiming that the graduating class of 2018-2019, the first graduating class affected by the policy when in 8th grade, saw a drop in Algebra 1 repeat rates from 40% to 8%. And that compared to the previous year, about 10% more students in the class took math courses beyond Algebra 2. But Families for San Francisco, a parent advocacy group, acquired data from the district under the California Public Records Act, and the group's analysis available here calls into question the district's assertions. As mentioned previously, repeat rates for Algebra 1 dropped sharply after the elimination of Algebra 1 in 8th grade. But whether the reform had anything to do with that is questionable. The failing repeat rate occurred after the district changed the rules for passing the course, eliminating a requirement that students pass a state-designed and of course exam in Algebra 1 before gaining placement in geometry. In a presentation prepared by the district, speaker notes to the relevant side admit the drop from 40% students repeating Algebra 1 to 8%. We saw a one-time major drop due to both the change in course sequence and the change in the placement policy. Enrollment in calculus courses declined post-reform. This is the real problem. You know what? I really wish. I mean, I took advanced math in school. I did. And it was hard. I would like calculus was hard for me. Doing it in university was really hard. I remember calculus 3 being a painfully difficult course. Differential math and linear equations, which was a computer science requirement, was really hard. But I really should have spent more time on that. And I wish that I had gone beyond that and done more statistical stuff. You know, I would probably be like 10 years ahead. I'd be way far ahead. Yeah. Could have been better. And you know, I've seen this thing that some people have been arguing that because we have computers and all of these things that we don't need to know about math as much. No, it's the exact opposite, guys. It means that you need to, the more advanced math, it just becomes more valuable. We need more people to understand advanced statistics, which is like beyond calculus. Because, you know, for instance, the way that you get the average is like XDX or whatever. So you know, like the whole basis of all of this statistics stuff is based on calculus. And we need to step up, but you know, that's a long stuff to work. Like the thing that I'm having an issue with on that side is that I can't teach you guys advanced math like here on a YouTube channel. That would be too you know what I mean? It's like, well, if you have the advanced math, I can help you apply it to the market. But you know, it's kind of hard to get that. You kind of have to read a book. A YouTube course, it doesn't make so much sense. They came back down. How long did it take? When did this start? Let's say 6:35. So it took 20 minutes, but they did come down to the bottom of this range in the treasury. The open was at 10 though. I do see oil taking off here, almost touching 109. $109 is so much. Yeah, about 15 minutes. It's yeah. Oh, Mohammed El Aran is going to be on Bloomberg apparently. It's time to run the upside buy stops. Yeah. I'm really interested to see how much unwinding happens today. It's being a Friday. Seems like a good day to go for some to try and trigger some short covering, yeah? Sticky keys, what? Have you been, by the way? Well, now I'm my leg is bouncing around, so I'm feeling a little ADHD, I guess. No, I don't think you heard the sticky keys button. Yeah, no, I know what you mean. Here, let's make it happen. That one. No. I was getting though the other day, like there's something's going on because the other day I like my chart was like not working, and I could very faintly hear a sound that sounded like the sticky keys sound, and I couldn't figure. Were you hearing that over the stream? Other than when when he just barely did it, but I pulled some stuff up to see if I could find out maybe what was happening, but looks like everything is nominal. NASDAQ killer says no what? I heard it briefly when I joined. I mean, maybe not. Okay. By the way, the 30-year and the 5-year like busted to new lows there. The 10-year ran into absorption and stopped. So I mean that sort of thing will happen from time to time where one instrument will kind of stop them, but I don't think I've ever seen it quite like that. Like the 10-year really put the brakes on. Oh, you didn't hear any sound. That's what you're saying. Yeah, I don't know. I really want to know what was going on with Ninja Trader yesterday because that is something weird that's never happened. It was like, I mean, I'll get Ninja Trader will go like unresponsive. Yeah, it happens all the time. But that chart, it was like if you moused over that chart, the cursor disappeared. It was kind of weird. I really feel like I mean I'm gonna let it sit for a month or two, but I'm kind of want to go back to the rhythmic setup. Could be Windows Update. Yeah. I've me too. The data resetting in CQG in particular is really annoying, right? Yeah. My cursor is funky. Okay, so the 10-year did stop them for a little bit. They are extending further. I'm going to puke this. And well, we shouldn't call puke it, but that's our take profit hit. I'm gonna flip around and maybe we'll try taking some sims. Nah, I just exited. I was planning on exiting my CTA position today because I had gotten in looking for a short-term bounce. Now I'm not so sure. Well, I'm not so sure. Like we got the bounce, and I don't feel very confident about where the treasuries are going here on out. I kind of feel like that we're in a relatively good spot that, between, let's say 2.8 and 3.2. I'll give you like a 40 basis point range there. Seems appropriate right now. But there's like some hardcore selling is coming to the 10-year. There was a big iceberg there that kind of stopped them for a little bit. They came back up and then they pushed further. So I'm not feeling very good today. I mean, it was a rough week in general. First of all, okay, it was earlier in the week was really rough for me because we had that Tuesday. Tuesday was the one that really was disheartening, where I caught myself trading in chop over and over again. It's frustrating because I had avoided doing that for so long. I hadn't done the one like that where it was the range that I killed myself in like a year, but so I kind of pulled back a little bit. I said, okay, we need to disengage a little bit, get things back under control. I thought that maybe we would trade today, but I mean, maybe we still will after consumer sentiment. But this is a pretty strong move here in the treasuries that I don't really feel like I understand very well. The day looks really strong in equities. I agree. Well, yesterday, so I was looking at 38.50. 38.50 would have been like the 20% decline from the highs. And I even tweeted about it. I was like, in before we hit 38.50 and all of the news outlets, start talking incessantly about how it's a 20% decline, right? But it didn't happen. That was like they stopped just before this. Is the rough week the reason why you trash? Are you talking about Daniel Inskeep? No, I didn't trash Daniel. I wasn't trashing Daniel. Don't say that. It was a very friendly. He actually I tweeted it at him and he responded and he said you know that it was a good video but that he wasn't going to get a PC. No, well that's not what he said exactly. He said um a good video. You're clearly a smart guy, although I don't think I will ditch my Mac anytime soon. No, Daniel, it's here. We're gonna respond back to him. No, you don't ditch the Mac. You just buy him friends. You know, I'm triggered. You know what? That's always been me though, right? As just as I'm not the fastest on the sarcasm or when people are ribbing you. Some people really love to do it because of that, but I mean, I'm not like Drax from the Guardians where he just doesn't understand anything a metaphor, but no. Oh wait, half. You know, another thing that I'm find a little curious about this move is that it looks relatively isolated and on its own. Well, no, I take that back. The move down did correlate pretty well with the move in the 6J. But the 6J is almost completely reversing its move, and the treasuries aren't. The treasuries are just sitting down here at the low and just kind of chilling. And the move down happens, market makers just kind of got out of the way. So it really looks like some force came through outside of the treasury that I can't see. Maybe some flow in the bonds themselves. But I think you've got the right idea, Lucas, that like the equities look really strong from yesterday. And if it's not like a short-term bottom, 38.50 is not a short-term bottom. At the very least, we could see some short covering today, it being Friday. But this move in the treasuries, I think, is a little weird, if I do say so. And there was again a really huge hedge of some sort at 08.5. So we have to keep an eye on this. I think that we could try and take some sim scalps in the 10-year here. See if we can find a spot where we can sort something out. I'm not particularly fond of this range that we've got right here at the moment, but it might develop a little bit more, and then we could find a better place to lean. What else was I gonna say? Now the next video, I think this weekend, I've been really, what is the word? Non-committal. I want to put a video, like since I put a video out last week, and I usually do videos like every other week. I don't have to put a video out Monday, but I've got a video. I think that's a good video. I tried recording it once and I didn't like it, and I've gone back and I've changed a couple of things. This could be a little bit different, but it's like it's the getting started in trading video. Because last time around I did it is like, here's all of these resources that you can go into and these sorts of things. This time it's going to be more like, okay, is this for you? Here's why we trade micro futures. Here's how you do it. Here's how you put in a trade. And I don't know. There's this. I will see what you guys think of this thing, but there's a. Well, I'm not gonna spoil it, okay? But there's I'm gonna show you something in there that I think is an interesting opportunity for complete newbies. Let's say, I think it's an interesting tool for new people. That we'll see what you guys think about it. Because what I'm starting to realize here's what I'm starting to realize. Well, there's two things. Number one, the appeal for futures can be much broader than it is. So they always say like, well, people don't like marketing. I don't necessarily like marketing. I mean, I have nothing against it, but I see a lot of people abuse marketing, right? I see a lot of people push trading systems based on unrealistic promises, right? Like when you go to a website and they're pushing some education course and they say this person made this much money and this person made this much, that's an FEC violation, because when you do that, you're basically representing that this is the average performance of your customers, and if they're not profitable, and seriously, in trading, it is always going to be the case that the majority of traders fail. That's just the way that the market works. Okay. As good as we get, as cool of a system as we get, the majority of traders will lose. That's the way the game works. So you're making as you put that performance claim up there. That's never going to be the average performance of your customers, and so it's always going to be something that the Federal Trade Commission could sue you for, or fine you for, rather, right? Nobody shows long-term P&Ls, and that says it all for me. Sure. Well, nobody posts like a 5-year P&L. Yeah. Well, like Roland, just straight up, day trading is really hard to be successful at. Like my approach here has turned into, hey, we can come in and we can risk $10 to $50 a day on micro treasuries, and we can get good at it. We may not necessarily ever have any real long-term success with it, but it's still a valuable thing, right? Like, for starters, we understand so much about markets, right? Really, it's contingent on me to take what I have learned and put it into more long-term kind of investing stuff now, right? Like, I've learned the things that I think I was like I didn't come into this saying, oh, I want to be a market maker for the rest of my life, sort of a thing. That's not how it started. I just said, I want to be in the market. I want to be an expert in markets and trading. And it kind of turned into market making because that seemed like the best opportunity for me, given the risk parameters and everything that I want, right? But I started there because I was told that, like, you start from the bottom up and you understand the market at this level. Then when you go to higher levels, you understand what's going on. And I can see that now. I can see how, okay, the way that you execute optimally on a single instrument, and how this single instrument affects everything else, really goes a long way towards helping me see, for my long-term trades, what to do. And it's been inspiring me to put more and more money away. I'm putting them into retirement accounts, of course, but I'm putting more and more money away. When I think live trading, I think 1 year of consistent profit proof. I understand where you're coming from, Kyle, because from your perspective, right? If you're having a hard time trading, right, and somebody shows you something that can give you a year's worth of consistent profits, then that would be like a great step in the right direction, right? When I say market maker, what I really mean is intraday trading. I should qualify that as intraday trading. I wanted to do intraday trading, right? There were times at which I was like, well, let's do market making kinds of strategies, but I've clearly come out in the direction of that speculation type strategies are more effective for retail traders. So if you can trade, why do they spend time selling systems instead of trading? Well, probably none of them really are actually making all that much money. I have to say though, TLA trader, like here's the thing. If I was being really successful at this, like let's say that I was like trading a 10 lot in ZN for, you know, a few ticks and stuff, right? Like that, right? I could make maybe some decent money on a yearly basis. I mean, I don't know. It's hard to make 20% return. If you're doing a really good strategy though, you could potentially make 20% return on a really big wad of cash, right? But you're gonna have to have a really, really huge wad of cash for that to equal like a 6-figure salary, right? Meanwhile, if you sell stuff, you can make so much bank. Like, just think about this for a second, okay? If you're selling a trading, and I don't sell a trading system that's this expensive, but we know people that are, right? Where it's like $1,000 for their indicators or their course or whatever the deal is, okay? All you've got to do is get 5 people. All you've got to do is get 5 people a month to buy it. And that would be basically equal to a 6-figure salary a year, right? So the reality is that selling a system, an overpriced system, is in the end more lucrative than trading, even if you are trading well. It is pretty messed up, right? If you're a guru, teacher, educator, you better show me something that tells me you know what you're talking about. Yeah. Well, and this is why when I come in and I want to teach something, I don't take the guru approach, right? Because to me, a guru means the reason you should listen to me is because I've made money, a ton of money doing this, and I've been super successful. And by following me, you will be super successful too. And that whole approach is wrong as it pertains to day trading. You cannot copy somebody else's strategy and be successful with it. It doesn't work that way. If you have a successful strategy and you give it to everybody, the strategy will stop working, right? So I can come in and I can say, well, I developed like good systems. Here's how to develop your own good systems, right? Here's how to develop your own. That's different. But to me, a guru is somebody whose authority is derived primarily on their supposed past success. That's why we call them gurus, because almost always it comes out that they actually haven't been as successful as they claim to be at least in the area of trading, and that they might be showing like a successful lifestyle and all this stuff, but the money that they're getting is from selling their course, not from trading, right? That's a guru. And I contrast this to an expert. An expert authority is derived from the facts. So I want to be an expert, not a guru. I am an expert, at least in the retail trading space, on block trading strategies, quantitative finance stuff, and trading in treasuries, right? So when I tell you guys something, the reason that you listen to me isn't because I can come here and I'll show you these numbers and, oh, we've been so successful in the past and you do what I tell you to do, you're going to be, no, that's the guru thing. No, what I do is I say, these are facts. These are facts. We can prove that these things are true, right? Okay. The square root law of meta order impact is an empirical fact, well proven by decades now of quantitative research into the markets, that has held up and is remarkably consistent. This is a behavior that we know for a fact markets do. And nobody in retail ever talks about it. I think in part because, one, they don't understand it, they don't know about it. And two, the few people that do understand it don't see how it would be relevant to retail traders. But I've taken the position of, anything that we can prove about the market can be potentially useful. And I think that we've shown here ways in which it can be useful. It's still a hard game because there's still a lot of uncertainty about there, but I think that our trading has become remarkably more consistent since we've started to utilize these kinds of practices. But that's not the point. The point is just that I think people ignore this, and probably we shouldn't. Probably they shouldn't. That's the only point of that. But I'm only sharing facts. We talk about the algorithmic trading, all of this stuff that I shared. Those are like basic facts that if you're going to do algorithmic trading, you gotta keep in mind. Tendency is you're going to overfit. You're going to have a tendency to fall into data snooping bias. Dollar breaking. Thank you for pointing that out, Octavius. It does look like the dollar's going. The man, gold is just getting absolutely creamed, and it is sitting right at 1800 right now. Yeah. If you sell a mechanical system to too many people, it will stop working. 100% true. I would really like to do. I mean, so we say that. That's not something that I can necessarily empirically prove, like that exact thing directly, right? We can say, okay, orders have impact. From what we do know about markets, based on the empirical facts, this is the natural conclusion, right? This is still something that I think you could test. If we had a technical price only based strategy that was remarkably consistent over a multi-year period, and then we started offering it to the public, and we could track the performance of that, and we could show, right? That would be a great study. I'm sure there's studies that kind of shows stuff similar, because there's definitely been guys at these big firms and stuff that they sized up too big and then they had to back off. So I know they sell gold when equities go down and they sell it again when it goes up. I know, right? You just can't win. Like, that's the thing that I think is so crazy, is that like we've had this crazy inflation over the past year. We totally called it. We went long interest rates, so well, I did. So I did make money from that in my larger portfolio, but then that didn't really save me when the market went down, right? And so then it's like, well, okay, maybe you should have hedged yourself with gold. Well, if we had hedged ourselves with gold, we wouldn't have made money. It's like there's the way that this market has worked, the way that this has played out is inflation came and everybody lost money, and there is like no refuge. No refuge. Anyways, not yet. Maybe at some point it goes, for sure. Let's see, our Coinbase is making a comeback today, huh? Mark my words, not yet, Seth. Okay. Well, we have NASDAQ killer is down on record as being a gold bull. 1800 is your price. We will come back every year on May 13th. We can remember that it was May 13th because May is the month of my birthday, and the 13th is an unlucky number. On May 13th, NASDAQ killer, gold 1800. And every year we will see if gold is higher or lower. And if it is higher, then I don't know. We will revere him as a legend commodities picker or whatever. Anyways, where was I going? I was going with something when we got onto the whole subject of people's gurus and stuff like that. I don't even remember where we was going with it. Nobody's showing long-term P&Ls. That says it all for me. Oh yeah. Well, so anyways, where I was going with that was just saying, yeah, on a 5-year risk adjusted basis, it's really hard to make money trading. It's hard to show like proof for it, but there's still other benefits from it, right? Like we learn a lot from the markets. It's fun. And yeah, if you really understand it, you can hedge yourself. Like we could, it only takes a few micro contracts in the treasuries to hedge your stock portfolio, for instance, right? I don't think it really helped you here with this whole situation with inflation and everything, but typically it does tend to be a good hedge, right? So the whole point of that was where I was going with that. What I'm seeing is the potential now that we have micro futures. Like basically what has happened is the entire futures industry is about to be flipped on its head. The introduction of micro futures, and especially now micro treasury futures, has completely changed the game, and we haven't realized it yet. Because before it was like futures were a really attractive, place to be. Or for if you wanted to day trade, then why wouldn't you do futures? You have to deal with the pattern day trader rule, all of these sorts of things, right? Now that like we have these tiny instruments and stuff, like the potential for futures, the potential audience for futures trading is much larger than it is. So that's the first thing that I'm starting to realize, right? Is that actually we have an opportunity to help a lot of people get involved in futures. And they're not going to make, the majority of people are going to lose money, okay? But there are benefits to it. And there's this whole thing that like, if it's something that's good for them, good for people, then really you're obligated to put the effort forth and, teach people about it and promote it and stuff, right? If you want to day trade, I think that micro futures are the place to be right now, right? And I think there's a lot of people out there that if they had stuck to low risk strategies in micro futures and just grinding and trying to learn that they probably wouldn't have lost as much as they lost from trying to invest in meme stocks. You know what I mean? Right? So that's the first thing, is there's this broader appeal. But then there's this other thing that I'm realizing, and that is that where we're at and what I do here on the stream is too much for somebody that's just starting, right? Like, I think that people have this idea that I can come into the stream and I can just listen to what Seth says and I'll be able to copy his trading and learn what he's doing. But the reality is that there's so many components to it, right? I mean, just from the main top level perspective, I'm watching order flow. There's all of this complicated stuff about order flow, right? And then I'm watching the economic news and the macroeconomic stuff, right? So there's all this stuff to learn about the macroeconomics. And then I watch the treasuries in particular. And so there's all of these dynamics about how interest rates react that you go through, right? And there's just like layer upon layer of complexity that for me, coming in and doing it day in and day out, I barely even think about it anymore. But if you're a beginner, you're coming in and you're watching this screen with like 8 different DOMs up, and we're keeping track of what all of the different instruments in the commodity complex are doing and everything. Like, it's too much. It's too much. And even though I feel like that, a lot of those things are necessary to really have success, well, let's say it really helps you. Okay, correlations are a thing, for instance, right? There are all these things that there are reasons that we believe that should be able to help you define your edge, even though we still know even after all that it's still going to be hard, right? So if I'm trying to teach somebody that's just coming in and doesn't know anything about micros, they're just coming in, they wanted to day trade, and we said, well, you should trade futures because that's like the lowest risk, and you don't have to deal with pattern day trading rules and all this, that, and the other, right? Well, how did they get started? really where we should be starting them is to just say, come in and watch the E-mini or the 10-year and just watch that one thing and put in a few trades. And then learn everything you can about the market and look for opportunities where you believe that you can predict what's going to happen. You can predict the future orders based on that information, just on that one thing, right? And then we can add complexity later. Then we can learn order flow and we can start watching the order flow. We as we go through the news, we learn more about the macroeconomics so that we can start watching multiple instruments, right? Like that's what I've got to do. Or like, look, there's lots of other things I'd rather be doing. But the thing that I think help other people getting into this the most, and the thing that will help the channel the most, is that I've got to simplify it down. I've got to simplify it down. What chart is top left with the Bart Simpson pattern? Oh, that's just the S&P 500. They're right, it is a Bart. It is a pretty good Bart there. We haven't come into the open yet, so I wouldn't look too much into what's happening there with the volume and everything, but we're going to get there in about 2 minutes. I'm a little I am actually, so here on the open. So let's just kind of go down through our framework. This is another thing that I need to do, is we should really be making this thing more explicit. So if we're going into the S&P 500, okay? I'll love you, Seth. You're my friend. Thank you, NASDAQ killer. I still enjoy having you around. even though sometimes I feel like you're trying to undermine the stream, but in general, it's been fun. Anyways, okay, so what are some things that we know right now that may possibly predict future flows in the S&P 500? Okay, well, number one, we know that it's Friday. Okay, so there will be people positioning themselves for the weekend or whatever it is that they want to do. But the most common thing that you want to do is you want to take off the risk before you go into the weekend, which means that we would retrace the moves that we made during the week. So that would suggest up in the S&P 500, right? The other thing that we have is that there does appear to be some sort of a sentiment change off of the indexes bouncing off of 3850. What are we trading? Well, we're talking about the S&P 500 index right now, right? So no, so again, number one, it's Friday, so we might see some unwinding of positions. Number two, there was a sentiment change at 3850 of some sort, okay? But so those are forces that I think are positive for the S&P 500. But there's something else that I see going on in the market that we need to make note of. The only thing, well, the most clear move that I can see here, pull your chart over here, right? The most clear move that I can see here today is oil. Oil is just like a good solid uptrend. They started the overnight session, they were down at as low as 106 and now we're at 109. So $6 gain on the session in oil. That could also have, I don't trust him to be a mod, to be honest with you. he will do he would abuse it 100%. He knows he would. He's just laughing right now. He's like, yeah, I would probably do something I shouldn't with it. You gonna trade NQ? Cool. Yeah, we were just talking about how we need to how we can kind of help beginners out a little bit more. So this video that I'm gonna put out on Monday is gonna be like, hey, let's just start simple and trade. And it is going to be a different platform, but I'll show you the platform. It's kind of cool. I think there's some cool things about it. It's not like the only platform that's ever done this, but it's kind of like the combination of features. It's making it accessible to people. right? So if the futures trading space is becoming more accessible, we should start moving towards being more accessible. And the thing is that if we start with that we get that beginner kind of videos a little bit better, the other especially our more recent content about like order flow and stuff, is such good content. I know it's weird to like praise your own content, but I'll go back and watch those videos and it'll be like, no, you did a good job of explaining that. So I'm proud of the content that we've made. Oh, no, I'll tell you what it is, Kyle. It's Iron Beam's new app. So Iron Beam has like a cloud platform now, which, like I said, they're not the first ones to have a cloud platform, but to have a cloud platform where like you're not paying a monthly fee for it, it's just included with the account and everything, is like, we haven't had that yet. And so the problem that I was having was like, oh man, you come in and you set up NinjaTrader and everything, like showing them how to get set up in NinjaTrader, there's like a lot of stuff. And if I'm making a video that's for like a complete beginner, because this is to replace our old getting started in futures video for beginners that is just a little outdated now. But with this one, man, if you just want a demo account, and their demo is only for a week, but if you just want a demo account, it's literally like less than a minute and you'll have a demo account and it runs in your web browser. So you get where I'm going. NinjaTrader and Jigsaw platform fees are non-starters for most people. Yeah, I mean, I think that the reality is that when you get to an advanced level in futures, that there's going to be a $50 a month fee somewhere. In my case, it's the Jigsaw, but you're right. But like that's the thing is like, but like think about it. Why did I go into this? Because I really started with the DOM, right? I started with the DOM and I kind of worked backwards and I started to incorporate more and more speculation into it, right? Probably I did that because I just like complicated things. I'm a technical guy. You know what I mean? But that's not really what's appropriate for the average person, right? The average person should be seeking to understand the market first and foremost. Because even if they don't make money from the trading, that's the thing that's going to stick with them and is going to help them in their life, Like you might lose money from trading futures, and if we're doing it right, the amount of money that you're going to lose is not going to be all that much. And it's going to be more than outweighed by you making a good decision with when you buy a house, or you making good decisions with how you invest in your retirement accounts. You get what I mean? $50 to $100 at least for good stuff. Yeah. Platform fees suck. Okay, so Twitter opens up 10% lower after Elon Musk tweeted that his takeover bid was temporarily on hold. Yeah, I mean, I think it's worth it. It is worth it. It's just not. That's just not where beginners should start. Probably. Like here's the way that I see it going is like you start out and you use the Iron Beam cloud app for like 3 months. And then during that 3 months, you're going to broaden your understanding of the market so that you understand by the end of 3 months, you want to understand all of the major economic releases that come out every month. And you want to generally understand how all of the different parts of the commodity all of the different instruments at the CME, let's say, how they move and are related, right? Then at that point, then you can start getting into let's watch a bunch of different other things and let's really focus in on the order flow, right? I kind of did it backwards. Now, there's going to be some people that are just really interested in order flow, and there's going to be a lot of people, I mean, a lot of people that are coming into futures. They've already been trading, right? Most of these guys, they've already been kind of in the markets, and so they've maybe already put in that 3 months, right? And so then those are the ones that, will start diving into the order flow, right? That's how I'm thinking it goes. But like the thing that really made me realize, okay, Seth, like here's your problem, is that I said, if I went back to Seth in 2008 and I said, okay, Seth, I'm going to show you how to trade. And I put up all of these DOMs and all this stuff. And like, I would be into it, but I don't know if it would have been effective learning for me, like it would be too much to absorb all at once. So we need to do like step by step. So step number 1 is we've just got to get you to the point where you can put orders in, right? You can put orders in and you can trade micro contracts. Okay, good. Now that you've done a little bit of that for a day or two, now what's your job? Understand as much about the market as possible. You want to read all of the news that you can. You want to, in particular, pay attention to what all these economic reports are and what those mean, right? Okay. Then once we've done that, then the next step would be watching multiple instruments, right? And then once we understand that, then we would get into the order flow stuff. And for today's NASDAQ killer, I said like, hey, maybe we'll take a micro. Well, maybe we'll just trade a sim on the 10-year here. But since that initial move down, it hasn't really gone anywhere. So this is kind of starting to look again like this range-bound choppy market that I hate. And like I could try trading this range and like leaning. I don't know if 10.5 is a very good place to do it, but I could try doing a range bound trade in here, but it's like you're looking for like 3 or 4 ticks, and the risk is that like another trend starts, So yeah. Anyways, so here's the other part is that once we get that out of the way, and there's at least 2 other pieces of education that we got to do, right? We got to do the gamma hedging video, and we've got to do a video about the bond market. Okay. So once we got those 3 videos done, then the thing that I've really got to try and work more on is making videos that are relevant to current events, right? To help people learn how, because the whole point of that and what we're really going for here in the morning stream, the reason that you want to be in here on the morning stream is because this is where we use the current markets to learn, right? Or we go in and we say, okay, what's going on today? Well, today there's consumer sentiment at the top of the hour, right? That's a really important thing. And it's particularly important given the context because the strength of the consumer is the thing that's kind of like holding this economy up. And if consumer loses confidence, then we're much more likely to go into a recession, right? I mean, I can put that in a book, but it's so there's so many different things, right? There's so many different things. So really coming in every day and watching it day by day and getting the experience, that's really where the thing that you want to come in and learn, and coming in and doing it with a bunch of people that have been doing it for a while. That's where there's like real benefit to a new person watching the stream, right? New person wants to come and watch the stream and say, okay, like where's my technical setup, right? But what we're actually doing is we're teaching you how the market works, right? So I need to make it more explicit that that's what we're doing here in the stream, and that's where they can gain that benefit from it. And we start making more videos about what is the current situation, right? Well, I'm also going to have to do something like I think I can be doing more for you guys, like you guys that are here every day and are already kind of pretty well acquainted with the market, and um I would like to give like more reason for you guys to be doing the YouTube subscription, because YouTube is coming out with gifted subscriptions. So, I don't know, would do like an end of day newsletter sort of a thing is kind of what I'm thinking. End of day newsletter. I think that would be nice. So where we can go through and we can talk about, here are the different large meta orders that we can identify today, and what our theories are for what caused that news. Okay, I was just reading a piece of news there, but I don't think that it's relevant. Oh, by the way, do I have? Okay, so I don't know. So it's funny, you guys are always super interested in talking about the guru thing. It really is, but it's like we're kind of past that now, right? I don't know. It's not something that I think about a whole lot anymore, just because there's so much more to learn. At least the blue wrench. Well, I mean, the thing is that we like almost never need to moderate the channel. It's a small. I mean, really, it's like the same group of about 24 guys. That's about how much we'd expect given the current popularity of futures trading. You wouldn't expect it to be hundreds of people, and we all kind of know each other, and I'm pretty lax anyways, so there's like really never any need, unless somebody's just straight up spamming, and that just like almost never happens. I think we run south a little on Zen, not adding up here, running up yet. Heat map was way too many bids. I don't know. Yeah. Oh, okay. We are already running south. I'm seeing this thing where like, well, okay, the 6J is moving is what's going on right here. So I think that looks like a spot. I'll put another one there. I'm going to do it with the wide stop, kind of do it risky style, but reluctant mods are the best. Anyone that wants the job is going to abuse 100%. Yeah. Well, I just, the human mind is a weird thing, and people aren't really very good at knowing how they will react to certain things until they're in those situations, right? And then even when they're in those situations, they don't necessarily understand why they're making the decisions that they are. I think that we here in trading, we tend to be a little bit more self-aware simply by necessity. But I can still look at myself and I can say, even with as much effort as I put into that, I think that there are a lot of situations where I don't really understand why I'm doing what, I think I understand why I'm doing what I'm doing, but I really don't understand my brain to that degree, So yeah, there's so many people that will get into positions of power and they'll start doing dumb things. And you don't want to admit to yourself that you're that way, And what do you do about that? Like, I don't think not everybody goes through this experience of like I need to get my life together. I mean, I've always kind of been like strict and things, so like I never ran into like the more serious problems like some people do, like addictions and things, like drug addictions and things like that, right? But the challenges that we go through might not be as extreme as that, but you just kind of come back and say, well, okay, I need to make some changes in my life. Like my son, he has not been taking school very seriously. And there have been many situations where he just straight up like didn't do any of the schoolwork, right? At some point I think he's got to sit back and be like, okay, I need to work on myself in these places, but I don't know, like that's like something internal. I don't know how you help somebody come to that point. But if you've never been through that experience, then you don't really think about this whole thing of, well, I'm this way and I probably would rather not be in all that, right? Sounds like a future CEO. There you go. Gonna have to bring them grades up. He's only in junior high, but if we get into high school and we're having those kinds of problems, I don't know what to do, man. I don't know what to do. That whole thing really concerns me, and I don't want to be like the mean parent, but my favorite is people who say they regret nothing they've done in their lives. What type of narcissist must you be to regret nothing? Well, I I would say like I would I think that what a lot of people might mean when they say that is that they wouldn't change where they wouldn't change, because here's the thing, like for instance, do I regret marrying and divorcing my first wife, right? Well, if I hadn't gone through all of that experience, I wouldn't be the person that I am here today, and I wouldn't rather be a different person. I wouldn't rather be a different person. I don't know. Like, may have been better, not gotten married. Maybe I would still have gone down the same path and gone down into finance. I don't really know. But maybe if I had, maybe I would have been more willing to like be in New York, and I would be like a fund manager now, right? Like I could, so do I regret it? But you know what I mean? You could say I regret it, but it's not like I felt like I did something like terrible bad or anything. It's just I'm I'm happy with the way that I am, right? Or the way things are, and this story that I chose for myself is compelling enough, and I want to continue working on that. I don't want to go and switch to something else. I know some people do, but that's what I think a lot of people mean when they say that, but what do market makers lean on? So something that you will see, NASDAQ killer, is you'll get to the edge of a range, and the bidder offer will be a lot more solid. You get these market makers that they've had their limit orders out there for a long time, and they want those orders to get filled, right? And so that could be like a profit taking order, but it could also be that they just still expect that range to hold. So if we're in a range bound market and we're looking to do more of a market making sort of a thing, then you kind of want to watch for those places where the market makers seem to be leaning on a price, right? So the reason that I took the short where I did was because I could see that we'd already developed some degree of downturn, and I could kind of tell that the offers were leaning, like that this offer that had just been added above it was going to take fills. Do you think market makers are good? Well, they're robots, is what they are, right? What if it didn't hold? Then I would have taken a loss for sure. Like that's where the key thing is like, okay, you're seeing there's a reason why that range is there, probably. I mean, we don't know why the market makers are doing that exactly, but there's a pretty good chance that based on the spreads and all of the other correlated assets and everything, there's a reason why that price would be like, they think that price is advantageous for them, right? So you've got to worry about, though, in taking those fills, about the possibility of adverse excursion and informed trading. So, that's why we kind of want to combine. So, for instance, there was already a little bit of downtrend. So that was one thing that was really working in our favor. We also kind of know the context of everything else. And, to basically, we can try and manage the risks to try and avoid that situation where we're gonna take the leaner and there's informed trading against us and we get blown out. If the past isn't indicative of future results in terms of directional moves, but how accurate is past overall volume day by day to predict overall intraday volumes? I don't know. Well, here's what I will tell you. In volume, in intraday volume, there is a heavy degree of autocorrelation of order signs, which means that if you are seeing selling right now, you're likely to see more sell orders in the future. And we believe, at least the leading theory and the empirical evidence that we have suggests that this is caused by large meta orders, right? In the commodities space on a day-to-day basis, we also see this phenomenon, but kind of more just from an overall trend perspective, that commodities have a stronger tendency to trend. And we believe that that is more to do with macroeconomic factors. That the macroeconomic factors that are leading that thing to move in that direction tend to be persistent. When a market maker sees informed trading against them, why don't they reverse? Well, I think that a really good robot doesn't have to reverse per se. They just don't take the fills. They just cancel their orders and they don't get filled in the first place, right? But at the same time, I think that they do a lot of the times. I think that sometimes that's why you see some of these like really aggressive moves is like market maker realizes that he's on the wrong side, or maybe he just got the same piece of information that the informed trader was going off of, and he's bailing he's trying to equalize out his position as quickly as possible. Okay, offering rewards for good grades is probably the only thing to get a young boy interested in grades if he's not otherwise into it. So even for a 14-year-old, I don't know, man. The difficulty I have with my stepchildren is that I don't understand their brains. I mean, I understand the mother side of their brains fairly well at this point, but I don't know their dad. Like their dad, he's a pilot. He's not a slacker or anything like that. So I don't I don't think that not doing homework is, has anything to do with that. It's like there's an attitude in here, some belief, some deep-seated belief about the self or about the world that is kind of causing you to not take it seriously. And not because to me as a kid it was absolutely unthinkable to ever go have an assignment that doesn't get turned in. That would be like, I would be so distressed by that. And this kid does it all the time. And the problem is that I know that they're not telling me everything too. So I don't know what you do about that either. That was probably getting a little bit too personal, but how do you it's a weird thing. Like when people come to me for help in trading and they're already making the step. All I've got to do is look at their results and I can pretty easily see what it is that they're probably doing. It's tripping them up. But what do you do when the person just doesn't seem to be motivated at all? If the Nasdaq is filled with algos and everything is correlated with Nasdaq, then the algos are the big dudes of this. Well, they're one major force. They're pretty good extension down now here in the 5-year. So first of all, I'm glad that I got out of my larger position over here, right? I could have traded it here in the macros, but the amount that I'd be making and risking, I don't know if it was really worth it. And like I said again, I'm kind of didn't really sleep very well. Had a hard week. Didn't eat very well this morning. I started the stream very, very late. So I think it's better that I don't take a live trade. But I probably should have tried to let that one ride. If I had caught the second contract, then I would be letting it ride and waiting for the liquidity hold down here, right? Sometimes it's just that the edge of a range coincides with the place where they need to do their zeroing of their delta type and eyeing big volumes in option sellers. Well, I think what you might find is that a lot of those spots kind of all coincide with each other, right? Is that a stand? Oh, you're right. It is. I forget what it's called. Yes, I have. It's called. I think it's T clock. I think it's T clock. So that and I went and I found a specific font called Digital 7 Mono, so that it would be really big. That way, when we're looking back on streams, we can find the timestamp more easily. What are the best firms that have the most sophisticated algos? I don't know. The thing I've been trying to learn as much about that as I can. And it seems to me that there are a lot of algo firms and they probably all have their own thing and they're all different. I think that the one that I would be most interested in is the thing that I'm most interested in is how Renaissance Technologies did things. Although, okay, so here's the news. So it is lower than expected. Okay, sentiment was 59.1 versus an expected 64, and expectations is 56 versus 61.5. The 1-year inflation preliminary is 5.4 versus 5.5. So it does look like consumer sentiment has been harmed, but it's only a tiny one. It's not like a really bad reading. But I don't know. I saw like a little bit of weakness initially there, but the S&P 500 seems to be moving up. We saw this. You mean the sell-off in the 10-year? Yeah. But the thing for me, Lucas, is that I'm not entirely sure that the reason the treasuries are moving down is because of a large meta order in the 10-year. It's kind of been a little bit disjointed. So, well, maybe I should take that back, because there has been a pretty decent, like, what? It's actually been almost 20,000 contracts short this whole morning, huh? Which is a lot. 20,000 is a decent amount. It looks like they're getting they could be getting rid of the long stuff on the 10-year. Well, it looks like the consumer sentiment, at least for the treasuries, is kind of causing a bid. It's kind of interesting that it's causing a bid for the treasuries, but that the S&P 500 is rallying. U.S. Treasury has 80% institutional. Well, no, not necessarily, because what I was suggesting is that it may be like more a correlation or just traders trading sort of a thing. But I don't know. There was this move at the beginning that ended at the top of the hour, and then there was this move that started 45 minutes later. That I guess the two legs down do seem to be consistent with a fairly large order. So I don't know what the cause of the order is. It could just be end of week stuff. But I haven't. It's kind of been like that all week. What do you mean when you say short? How do you know? Anyways, but I think that Luca's probably, it's more that I'm just not all there today. I don't feel like I'm all there today. I really don't. I don't think I fell asleep until like 11:30. So I'm a little bit less sleep, and it's just been a stressful weekend in general. Oh, when I say 20K short, what I mean is the cumulative delta. Do you see over here? I'll highlight it for you. I'll circle it. You see, they started this session at 80,000 contracts, and now they're at 60,000 contracts in cumulative delta. So there's been a net change of negative 20,000 contracts, and 10,000 contracts is like a decent leg. So, but it's reversing now off of that news. So here's the next thing here. So here's where we kind of gaming it out can get kind of interesting, right? Okay, so we had two legs of meta order and then a piece of news. So let's say that now we are having a counter meta order that has retraced the last move. Okay, and it may there's a pretty good chance that it's going to take them even higher. Like I actually think up to the open. Well, geez, as soon as I say that, they just sweep two prices with like 4,000 contracts. So that's it right there. Let me try and draw it out for you. Okay. Large meta order short. Short-term post-meta order regime change. Second leg of the meta order after 45 minutes, right? Okay. So that suggests that this and this are both legs of the same large meta order. Okay. Now we're getting counter meta order, which we would expect to outdo this. I don't know if it's from here or if it's from here, but I'm thinking it's from here, because this kind of fall here didn't actually have volume associated with it. This one did. Okay. So we should expect this move to come back, and because it's coming back immediately, it's going to go further because the liquidity is going to be lighter in here. Okay. So now that we're here, now what happens? So question. Is there a third leg to the meta order? What was this leg? Because if that leg was like the Bank of Japan selling more treasuries, there's going to be a third leg probably, because those guys, when they do their moves, those like go all day, you know. So if we have a good idea what's causing the meta order, you know, we can perhaps make some speculations about how persistent that order will be. And the reason it becomes interesting in this particular instance is because if there is another leg of the meta order, then probably it will come in here and it will smash this down even harder. But given that the one thing that would stop me from taking that trade is that the S&P 500 rallied there. So it could be the S&P 500 could be rallying there because they see that as something that will hold back the Federal Reserve's tightening plans. So let's see if we can get in here, see some of the commentary surrounding this news to see if we've got something a little bit more in there about like how they expect this will affect the Fed. Okay. University of Michigan sentiment survey was expected to fall back a little. Instead, it puked to news cycle lows. Okay, so I said that it was less than expected. Apparently, the degree of sentiment decline there is considered significant because it is like the lowest that we've had since 2011. Okay. My window moved on me there. Okay. The gauge of current conditions dropped 63.6, the lowest in 13 years, while a measure of future expectations declined 6.2%. I don't remember anything crazy going on in 2011 that would have caused that low of consumer sentiment, though. I don't know. Anyway. These declines were broad-based and visible across income, age, education, geography, and political affiliation, continuing the general downtrend in sentiment over the past year. Consumers' assessment of their current financial situation relative to a year ago is at its lowest reading since 2013, with 36% of consumers attributing their negative assessment to inflation. Inflation remains at the forefront of consumers' minds, Joanne Husu, director of the survey, said in a statement. They mentioned inflation throughout the survey, whether the questions referred to their own personal financial situations, their outlook on the economy, or buying conditions. I agree. What do you mean by why is it that we don't hear of market makers making money compared to Renaissance? Well, first of all, why is it not the case that Renaissance is doing market making strategies? I'm pretty sure that one of the things that they started out with was like statistical arbitrage in futures. So the median expected year-ahead inflation rate was 5.4%, a little changed over the last 3 months and up from 4.6% in May. The mean was considerably higher at 7.4%, reflecting substantial variation in price changes across types of goods and services and in household spending patterns. At the same time, long-term inflation expectations remain well anchored, with a median of 3% settling within the 2.9 to 3.1% range seen over the last 10 months. Buying conditions for durables reached its lowest reading since the question began appearing on the monthly surveys in 1978, again primarily due to high prices. Americans' view of the current financial situation compared to a year ago is at its lowest reading since 2013, Husu said. Nearly half of respondents didn't expect their incomes to keep pace with inflation over the next 12 months. Yeah, I'm surprised. So, seems... Oh, what the heck is going on with my 5-year here? Oh, well, I'll just ignore it. I don't know if you noticed because you're not around during the afternoon, but liquidity during the PM remains the same during the market open, even with less volume traded. Participants are really risk averse still. You know, you're right. Like, I mean, the liquidity is just overall is just crazy bad. Like, I remember you being around in what was that, February of 2018, and it was like low liquidity, and it was just so crazy. And now all of a sudden, it was like, dude, like we need to be careful because what happens when there's a real financial crisis and we get this volatility and they pull, and there's actually something going on. And then we come into this market where we've had this low liquidity now for like 5 months. Do you think that that Renaissance's Edge is having enough money to move the book the way they want? No, I don't. Um, just being able to move the markets is really a disadvantage to you, not an advantage. Because again, it's all about the inverse sine law. If you move the market, okay, and then you want to get out, getting out moves the market too, whether you want it to or not. And because of the disruption that you caused to the market from your initial move, your exit will have more impact. And this is empirically shown, right? So that's why the whole block trading industry exists, right? So one of the biggest sources of like trading business that all of the banks do is they block trade. They have gotten good at reducing the impact of their trades, and so hedge funds and other people pay them to execute the trades for them. So they trade the block with Goldman, and then Goldman turns around and sells it to the market. And Goldman makes money by executing it better than what they were paid to, the price that they were paid to do it, right? They come in and they say, okay, we know that if I sell 10,000 contracts on the 10-year treasury in this situation, that it is going to push us down like 8 ticks or whatever. So I will tell them, that would make like my average position from selling like 119.11. So I would tell them, okay, I will buy it from you at 119.06. Right. That way I'm making a little bit of money above what I would have sold it for. Right. So my average, my average sell ends up being 119.11, and I bought it from them at 119.08. So I made money. And that's their whole thing, right? And how do they do that? Well, there's all sorts of things that they do, but the primary tool that they use is they space their orders out to have a minimal impact on the order book. So they'll come in, they'll move the market so that it creates a liquidity hole. And then once they've created the liquidity hole, they'll execute as much as they can in the liquidity hole, but they'll do it more slowly. And then after 45 minutes, the book resets, then they'll push it again. And they get as much out in the liquidity hole. And by spacing it out in those waves, that's how they optimize their execution. And the way that they like time the algorithm that they use to time it is called Almgren-Kress. And I don't know this specifically, but that's just the way that the industry has gone since that paper. Well, actually, I guess I do know it specifically because they were the ones that told me about that study. What do you mean? What if they're in the close? Well, one thing that you can do if you're selling stocks is you can sell it into the closing auction. That is an opportunity for you to make pretty large transactions, and get lots of liquidity for it. But there's downsides to that as well. Yeah. Well, but listen, the Almgren-Kress algorithm was published in a public paper in 1990, like October of 1999. So Almgren-Kress was kind of like the start. I'm pretty sure that they have like taken that so much further in the last 23 years. Right? but I know I had that study presented to me, and so I know that Omgren Chris is a fairly significant part. That is like the gateway to block trading, right? What do you mean by who do you think the government is using to market make for them in bonds? You know that the Federal Reserve Bank of New York has its own trading operation, right? That they do their market op. So maybe that's what you're looking for. In fact, I think it was the Bank of Kansas. I think it was the Central Bank of the Federal Bank of Kansas that they've been without a president for like a year, and the head of the trading desk in New York is going to become their new president. So that's interesting. Can you please explain Omgren, Chris? So, to be honest with you, I don't understand the math, but the gist of it is that the optimal execution is to execute as much of it as you can at the beginning and to reduce it in a square root manner. So you get a curve like this, and then the next one that you execute will be half of that, and the next one you execute will be half of that, and the next one you execute will be half of that, until you just get the rest of it out, right? Because when you think about it, in the market, every move that you make disrupts the liquidity more and more. So you want to take as much advantage as you can of that first move. This is why the first move is always the best move, right? Most meta order impact, this one. So this wave will tend to be less than this wave because they're going to put, at least there tends to be less volume than this wave, right? And then you tend to get this. How many times have you seen that pattern? Right? Like that's what the market tends to do. You look at all these commodities and stuff, you'll see this pattern so often. That's why. It's because that's how they execute the meta orders. Wish you added to your short on that pullback. Yeah, that was a pretty good pullback too, wasn't it? And I think that well, the volume on that down move was quite a bit more mild, but there was selling in the 6J on there. So I think that we could say that the consumer sentiment move disrupted the market, but the treasuries continued to sell because they had the meta order was still there. They weren't done executing, and they were of course pausing for the news, but in the end they didn't care what the news was. They were always going to sell it, right? So I think that move there, even though we didn't take a trade off of it, I think that move was in support of the theory that we had that the meta order will continue to execute, and that could push them down to new lows. For a nice big, well, I mean, in the treasury, again, first move is the best move, right? So your opportunities are diminishing here in the treasury. I think that they could see another new low. And then probably after that, even though it may push lower, the moves may be a little bit more calm. Do they execute? No, they generally speaking, they're going to want to avoid the news, right? Do you think that the poor overall liquidity changes the square law of meta order impact? No. So the square root law will still apply, but the impact that the individual orders will have on the market will increase because of the lower liquidity, right? So you still get that square root law. It's just that, like, it basically the C will change. or actually with the square root law. So here's the thing: is like the square root law is c omega times the square root of q over v. These are good questions, guys. Okay, this c is specific to a stock and tends to be very consistent over time, but it will change as that stock or that instrument will change. There's also this omega which changes. So in this particular case, if the liquidity in the book is lighter, then this omega is going to be higher. So you can actually extend this model, and I forget what the resulting equation is, but it's in that book, I'm pretty sure, where they come in and they show, okay, based on the resting liquidity, this is what your omega will tend to be. So in this particular case, because the liquidity is lighter, this omega will be higher. Okay, why? If they had a large order, they can execute most of it even at a better price in the news. Well, okay, so you don't want to like make a bet on the news though, right? So something that I see happen a lot, and I really mean a lot, is like there will be a big piece of news that the market is waiting for, right? And so these guys have a meta order that they're going to execute, and they're just waiting to start executing it until after the news. And so because they don't want to deal with the volatility of the news, and that like the thing is, well, okay, so if they had a large order, they can execute most of it at an even better price than the news. No, because the liquidity pulls during the news, right? So if they put any market orders out in there, they're going to have more impact if they try and trade like, immediately before or after the news. So it's better to see the news come out and let the market equalize for like 10 minutes and then come out and start executing your order when the liquidity is back. Right? Which is probably what's happening here in the Treasury. So they did touch the previous low there. I'd wager there could be more in that move, but your risk reward is quite diminished here now. When we first identified that situation was really when we would have had to have taken it to really get much from it. But I think that was a really good example, though, of where we can potentially predict these orders, right? I just wish that we had a clearer idea of what's driving the order. So I'm really wondering here. The market seems to be doing this means that the Federal Reserve will have more easy monetary policy. That seems to be the bet that the equity market is making. Although there certainly is going to be that end of week and short covering forces that we talked about in general that are kind of seem to be creating some bid, right? But the concerns about oil and inflation was another force we identified. It does not appear to be very strong. I'm not seeing the price of oil affecting the S&P 500 very well. And they don't care that the interest rates are rising, so. Why not place limit orders instead of market orders? The news usually has a massive volume spike. Well, okay, but if we were going into consumer sentiment and you never saw the book pull, wouldn't that make you a little uneasy? Maybe you have something there. I don't know if they've ever tried it, but for them, the news is kind of like a dangerous thing that they just kind of want to completely avoid, I think. But I mean, you're thinking outside of the box. Maybe you might have something there. Personally, if it was me though, I would rather like here's the thing is like maybe you get lucky on the news and you get well, okay, so let's say I want to sell it. Okay. In this let's run through this exact situation. I want to sell. Okay. So we were at the lows before the news, right? Because the news was up, it came all the way up here. So he was able to start executing his meta order all the way up here, right? So in this particular instance, the news helped him, right? The news helped this meta order get a higher price, sell from a higher price, right? Now what if it had gone lower, right? Well, then none of his orders would have gotten filled anyways, right? So I think it makes sense to me. I can't prove this, but just kind of trying to game that out, it seems to me that you would do better by just avoiding the news, just avoiding the news and relying on, you know, your execution algorithm for your edge instead of trying to make her lose, you know, trying to improve your basically you could try and make a speculation on the news to improve your trade, but your performance is probably going to be better if you just rely on the more consistent edge. The more consistent edge based on the empirical properties of the order book. Their job is to get a better price. Yeah. Yeah, because the higher their average sell price is, the more they make. Because essentially what happened was, let's say that the Bank of Japan is selling 50,000 contracts, and Goldman Sachs is executing it for them, right? What it really means is Japan sold a block to Goldman Sachs, so Goldman Sachs bought it. And the way that Goldman Sachs determines the price that they're going to that they bought it at is they do the math. They say, what's the impact going to be? This is what our average price is probably going to end up being because of what we know about impact. And so we need to buy it lower than that for us to make money. That's how they do it. And the higher the price that they can get, you know, if they bought it way down here and today had ended up being a really strong trend day up against them, then the more that they waited. So there's this other thing. Remember when I said Omgren Chris that it kind of looks like this? Well, it changes. There's variables. This is like the default case. This is if the amount of risk that you want to take on is low, and there is not a trend in the market, because you can come in and you can say, is it trending up or down or whatever that is, right? But if you want to take on excessive risk, then the curve actually kind of turns the other way around. And you want to execute as little of it as you can at first. And then at the very end, you know, you get one big mass that you trade. And so that would be like the situation where you take on the risk and it works out and it moves up. Then there's going to be this trend up, and the people that are buying it hopefully don't even notice. And you do it a little bit by a little bit until by the time that it's like really obvious that you're doing something, like most of it is gone, and then you get rid of the last half of it at the very end, right? So then you could have this thing where, okay, they bought it at 03, but because the market was kind to us and we knew what it was going to do, we ended up getting a way better price. Right. Buy the bad news, sell the good news. Yeah. I mean, it's once you understand the mechanics of it, it's, you know, then you can start going through those scenarios in your head. And I think a lot of what the market does makes a lot more sense. Yeah. It's just so beautiful to me that without a real understanding of the market, it really is just looks like noise. Like it's really just statistically indistinguishable from noise. And any edge that you would really be able to pull out of noise, you can't. This is like profitable trading is just a crapshoot if it's all noise. But then when you actually understand the structure of the market and the odd characteristics that those introduce into the markets, all of a sudden uh, everything that the market does makes complete sense. I might not be able to predict it all the time because I don't have enough information all the time. Sometimes I have enough information to make a prediction, but after the fact, I should most of the time be able to gather up enough information to understand why it moved. And, using just a few framework rules, all of the sudden, all of these things that are just so paradoxical and confusing to everybody are just like, well, no, duh. Well, yeah, they're doing that because the orders are what matters. And the way that the orders are reacting to that particular piece of news is different from what the fundamentals suggest because, you know, of how this business works. They were already, they bought because they were already short or whatever the deal is, right? Good trader needs to be flexible and mellow enough to move with the flow. Yeah, probably. I don't know if I'm that flexible and mellow. Sometimes you guys tell me that I'm like really laid back, but I feel like that I'm not. I'm much more laid back when I'm not on medication, I tell you that much. Sometimes I'm a little high strung. Yeah. I definitely run into this problem where all it takes is one little hit and like my psyche, my decision making is just poor. Like I think I'm fine, but the chemicals aren't firing in there, you know. I'm hopefully having rest because I tell you what, like we were I was pretty unhappy Tuesday, and then Wednesday we didn't really trade the Federal Reserve. Thursday we could have traded. We could have traded, and I kind of decided to relax. Wednesday and Thursday, I felt so much better at the end of the day having made those decisions to not touch this one. If you try to fight the market, we'll kill you in a second. Yeah, well, I mean, if a large meta order is going the other way and you take a trade against it, you're gonna get screwed. Like really think of it this way, okay? Pretend that you're the big trader. Everybody's watching what you do, okay? But you're not the biggest trader, okay? So if there's this bigger trader out there and he wants to screw you over, right? It doesn't matter what you do. He can always come in and trade it against you and push it to your stop and kick you out of the market, right? So if that was the situation, how would you ever make money? Right? Well, you would have to only trade in a situation where that guy that's trying to trade against you would be stupid to go the other way, right? Where the flow is so overwhelmingly in favor of a certain direction, right? So what that really all means is that probably the most important factor, once we have everything else, once we have all of the stuff that we can prove, okay, these are the way that the market works, and we understand the macroeconomics of everything, at least enough to have like somewhat of an edge. We've proven that we have somewhat of an edge in that. Okay, but then even after all of that, you might not actually be successful. And what is the thing that's going to have at that point the biggest contribution to whether you be successful or not? It's going to be trade selection. It's going to be knowing when you have that situation where you can predict the future flow and knowing when you don't. And it's unfortunately probably the hardest thing to do as well. And at least for me, there are so often that I really think I know what it's going to do, and I just don't have a clue. And there are so many situations where I really kind of know that it's kind of flaky, but I still take a ton of trades anyways. So it's not very good trade selection in those situations, right? But when I'm doing really well, you watch those periods where it's like, a month or two and all I do is win, right? How am I able to do that? It's because my trade selection is better. I think part of what makes the trade selection bad is when things get volatile, right? Because when things get volatile, a lot of how we decide whether it's to trade a trade is because it's going to move. Well, if you're getting volatility, it moves all the time. And so you just think, oh, I can trade all the time. But we don't actually necessarily have a situation where we really, really strongly understand what's going to go on. This situation in the beginning, I think that we could have caught, we probably could have caught leg 2 and 3, but not leg 1. I wouldn't have had any clue. And I still am not really sure what's going on. I just know this situation is as such that we could have continuation legs, but that's selection. And this time I didn't select that trade. Right? Was that the right decision or not? I'm not sure. But in this case, you would have made money on it. That doesn't necessarily mean that this was a trade that you could have selected. But where do where you even put that line is kind of a little bit fuzzy. Probably if we could really, really empirically measure all of this stuff about how sure we think, about a trade to begin with, and we could maybe find a measure that would be an effective predictor of whether or not we should take that trade. But filters. I had this lingering thought. If I pretended I was trading 100 lots on ZN, would I take the trades or would I take the trades I do, or would I be a lot more picky? Yeah. Well, if I was 100 lot, I would. So here's the thing that I think would change things for me if I was 100 lot. Okay. Look at the inside here. Okay. So like the 539 bid sold back down 400 bid. Okay. So if 200 bid. So if I added 200 lots on the inside right there, especially right now that it's 700 by 600, if I added 200 lots on there, that would flip the inside book, right? And that might make it more likely to tick back down, and then I don't get filled, right? So or if I added 200 lots at 070 right now, right? That price would all of a sudden, that would be 1,500, and that would start sticking out on the offer. Would that affect the market? I don't know what kind of effect that those really ultimately have. But yeah, the market does behave differently off of those. So yeah, you would have to change how you trade, like, a lot. For one thing, you might have to sit down and say, well, I want this price, like I want 07.5, but I'm not going to let that offer go above 1,300. So I might only add like a few contracts at a time, and wait for other people to cancel. And then when other people cancel, then I can add more, right? But like, these are the sorts of things that you got to think about when you're the big player. That's why, well, almost all of these block traders, they're using algo assist. And one of the key things that they'll do is they'll auto bid an offer at every price. That way, if I do want the fills there, my orders are already in there and everybody's stacking behind me instead, right? Because I've already got the spots in line. But if we were doing really, really well and we had scaled up to 100 lots, Probably would be hard for me to do it with limit orders. Probably I would have to do it with market orders and size up as it went down. Have you ever calculated how many infections the market has when there is news and when there isn't? Sorry, did you mean something else by infections? Let's come in here. We check for okay, so I see here a picture from Patrick Rooney of Trading Technologies, great guy that shows Bitcoin volatility coming off considerably. Bitcoin is kind of overall headed up for the day. Gold and silver recovering here, by the way. Don't really got much else than that. How many turns? Oh, like inflections. Oh, I was. Why did I read that as infections? I can't read. No, it says inflections. That's weird. I promise I'm not dyslexic or anything. That's just, I'm tired, I guess. No, but there was some research by Jean-Philippe that showed that volatility after a large volatile event subsided substantially more quickly if the market knew what the news was. That's about the best I got. It took a great trade in the wrong direction. I waited for a pullback, but it didn't come, and losses just went higher. Point here, large lot trader would have cut off if they are wrong, I think. Yeah, well, and like that's the thing is that you noticed how much I care about when I'm taking. So the micro yields are kind of like a really good test of this because you have enough lots to, like if we wanted to buy right here, right? We bought at 938, we would be catching the edge, right? We would take all of the offers. They might add more at 2.938. Well, okay, now it's gone. So now we could sell 2.936. Okay, if we sold 2.936, we take that one lot, okay, we would be short and the next price, so that's really what you want right there is we took that and now we've got like 2 ticks in our favor. Now, unfortunately, with the way that the micros move, you don't have much of a chance to hit back into 2.933 if it comes back the other way. But you get what I mean? Like if I'm right and I'm hitting into it aggressively, like it should move. It should move my direction. And if it doesn't move my direction and it sits there forever, it doesn't necessarily mean that it's a bad trade, but it does mean that you didn't get the best execution, right? Because the best execution would be it just goes and it never comes anywhere close to coming back. But so if I think that the market this is going to be an up day, right? And I'm not seeing that the market is moving up and that all of the order flow is auto-correlated to buy after 45 minutes, then I'm wrong, right? And I can get in and it might take some time. Okay, but if I'm timing it right, it should only be like a difference of like 10, 15, 20 minutes. So usually if I've been in it for 20 minutes, I should probably get out. And definitely after 45 minutes, right? You're doing something wrong. Like that's kind of the cool thing about the whole large meta order thing is that kind of helps you time them, right? What I'm seeing right here in the treasury though doesn't look like a meta order up that. It looks like post meta order impact. So I'm thinking that the market is going to balance somewhere around here, at least for the time being. There could be more later, but and there could be some starting here, but usually the one that starts at 8:46 happens after I leave. And there's the whole like close. There's a whole European close, so that kind of becomes a dominant factor now. That's probably why meta orders at this exact time aren't always, unless they start at like exactly at 8:46. Buffett said if he only had $25 and someone offered to sell him all the Bitcoin in the world for it, he wouldn't take it. No, who would? Listen, all the Bitcoin in the world, if Warren, I think his analogy there is so perfect. I think that a lot of people in the Bitcoin world missed what he was saying. If all of the Bitcoin in the world was owned by one person, it would be worthless. It would be completely worthless. Like, yeah, you could sell it back to people, but who's going to buy it when the person that owns all the Bitcoin in the world is selling it? Right? There's a point at which Michael Saylor owns so much of the Bitcoin marketplace that nobody else wants to trade with him. I'm actually wondering if you're starting to see that happen already, that like there's these rich holders in Bitcoin that have all of the money and everybody else has already been burned. And so when we had a rise in crypto at mid 2021, you didn't really see very many people jump on it that time like you did the ones before, because they had already been burned. There's nobody else to buy, right? Whereas if you owned all the land in the world, that's great. Why? Because land produces stuff. Companies produce stuff. Those things are valuable even if you owned all of them. You owning all of them would make it even more valuable. You owning all of Bitcoin would not make it more valuable. It would kind of make it useless, because you would own all of the Bitcoin in the world, but unless you sell it, you're not going to make any money from it. It's a perfect analogy for the problem with Bitcoin, which is that there's not actually a real fundamental intrinsic value to it. If I own all of the treasuries in the world, that'd be great. U.S. government would pay me 2 interest rate payments every year, and then at the end of those maturities, they would pay me back the principal, and we would just keep rolling them over and over, and I would make money. Right? Treasury has intrinsic value because Federal Reserve pays you back. Bitcoin doesn't. You own it all, it wouldn't do anything. Its only value as of right now is speculation. And speculation, you can make money speculating, but that's not necessarily a good long-term investment, is it? Have a great weekend. Hey, thank you for stopping by. Been pretty regular, so congrats. It's good to, trading is requires a lot of discipline, right? You got to wake up early, you got to be there every day, sit in front of the screen and everything. So for you guys that have made this a part of your morning routine, like bravo. And you're consistent about it, and you guys really are consistent about it. I'm consistent about it. I mean, me coming in here and streaming early morning every day, that's probably my greatest accomplishment. Just having the ability and willpower to do that day in, day out for 5 years, that's a real accomplishment that most people can't do. If I can brag, yeah, trading is fun. Yeah. And really, don't you think that like here's the kind of the controversial opinion in all this stuff that I was saying all the time, that people would disagree with, because people say, well, because most day traders fail, that means that you should never day trade. I don't believe that. Because first of all, somebody has to do it. Somebody has to do it. If all retail traders suddenly decided to just stop trading, right? And all they ever did was just put money into their 401k, like that would cause problems. Okay. There has to be like a certain amount of noise in the market for them to like transact. And if we disappeared, markets would seize up. So somebody has to do it. And I am more prepared than most people. I'm more capable than most people of doing it. So I should do it. I shouldn't blow all my money on it. But even if you're not making money on it, there's still benefits from it, right? I wake up early every day. I get a lot more done. I know a lot about markets. I know what's going on. And that helps me make other financial decisions. And it has its made. Dude, because I knew what was going on with the housing prices, and I knew what was going on with the interest rates. I got a pretty good interest rate when I bought my house. And then when COVID happened, I knew that the opportunity was there, and I refinanced, and then I got a really good deal. And so now I'm pretty set with the house. Hopefully I never have to move. If I ever decide to go back to Wall Street and I have to move to Chicago or New York or something and have to sell this house, that'll be really sad. But got a pretty good deal. That's tens of thousands of dollars. So I can come in here and trade micros and lose money on it for years and years and years, and I would still be coming out ahead. You know what I mean? So I think that especially when we can say that the amount of risk that you're taking on is only a few dollars at a time, I think that there's a lot of really good reasons to trade. There's a lot of really good reasons to trade, and I think that there's the potential audience that we can teach about this stuff is just growing larger and larger. I used to think that this is such a niche thing, and all of a sudden in the last month or so, all of a sudden I'm starting to realize that this is not going to be so niche forever. People can retire on one trade all the time. That's true. I mean, another thing is, you understand. So if you come in here and you trade treasuries off of order flow, right, and you understand everything that we teach here, you can then turn around and you can learn something like options. You can be a lot more capable. And then, you get lucky with an options trade and you can just retire on that. I heard about a large lot trader that would come into work for 3 weeks and not pull the trigger until his setup showed up. From Gallo goes, yeah, okay. If I knew of a setup that was that reliable. Actually, there are a couple of setups that I did that were pretty reliable, but they weren't like common enough. So, but maybe I should go back and try and look for some of those again. I remember there was the zipper setup. That one was good. That one seemed to start when I was talking about it, seemed to be affected. But if I just don't say anything about it, I could maybe trade that one. That one's maybe like a once a week sort of a thing. Yeah, we could investigate. But the issue with a trade like that is that you have less samples, so it's hard to know if there really actually is an edge to it, right? Unless you can like mathematically prove that there's an edge to it. But I've never seen any kind of setup like that. Unfortunately, except for arbitrage. Arbitrage is the only example I've seen like that. We could look for that. I made an indicator that you could put in a base price and interest rate and DV01 and everything, and it would try to predict what the future price or what the on the run price should be based on the future. But and it's pretty close, but it's not close. It's not accurate enough. I think that if I want to do the arbitrage in the micros, that I really need access to that index. I should look into that today and see who provides that data. Anyways, guys, thank you for stopping by. Pretty good. You know, it started like really slow today, but we got a lot of viewers today too, so I appreciate it. It is, but I'll get going. So hopefully we get our video done this weekend. We have that out on Monday. And rest up, because I don't. Maybe some of the best, if the market's recovering, then hey, maybe the next few weeks could be really, really great. So let's make sure we're ready for all that. Rest up. In the meantime, stay profitable, friends, or at least don't lose it all.